Hello to my friends, the ninZa.co family and traders from all around the world. I'm excited to share a topic today that, while not entirely new, remains incredibly captivating and has proven to be a game changer for countless traders. It's the follow the whale strategy. This strategy focuses on tracking the footprints left by major players like institutional investors, banks, or the so-called big boys. By aligning with the flow of these whales, you can ride the trend and turn their moves into your profits. Currently, there are a few indicators available to support this strategy, with order block being one of the most popular. It identifies price zones where whales tend to trade. However, these indicators are mostly designed for traditional chart types like minute, tick, or range charts. But here's the thing. We've noticed a growing demand among traders who love NinZaRenko charts and want to apply this method on this bar type. So, we created the King Order Block Indicator. This powerful tool helps you pinpoint the exact price zones where whales operate with remarkable accuracy on NinZaRenko charts. Honestly, I was blown away by how well it performs. Despite using relatively simple algorithms, the signals it provides are impressively precise. Even I didn't expect it to work this well when I first finished developing it. Still skeptical? Let's take a closer look at the signals on the NQ chart using the King Order Block Indicator before diving into how it works. These are the real live signals directly on the chart that I wanted to show you. Of course, the King Order Block Indicator can work with any instrument across different markets. What do you think about these signals? First, let's dive into how the imbalance zone is identified on the NinZaRenko chart type and why recognizing these zones is so important. We identify imbalance zones on NinZaRenko charts differently compared to traditional candlesticks. Here's how we do it. For a bullish imbalance zone, we look for a sequence of consecutive bullish bars without lower wicks. This indicates a strong buying force overwhelming any selling pressure in that area. For a bearish imbalance zone, we identify a sequence of consecutive bearish bars without upper wicks, signaling dominant selling pressure with minimal or no buying activity. Identifying a sequence of consecutive bullish or bearish bars without wicks clearly shows a strong buying or selling pressure in one direction. This happens because when whales enter the market, they usually do so with large volume orders. The sheer size of these orders creates a significant imbalance between supply and demand, causing price to move sharply in one direction with little to no opposition. You can easily set a minimum number of wickless candles required to form an order block. For example, if you set the minimum to 5, the indicator will look for sequences of at least 5 consecutive wickless candles to define an imbalance zone. Similarly, if you set it to 2, the indicator will display imbalance zones formed by at least 2 wickless candles. Next, let's talk about identifying BOS, break of structure, and Chach, change of character, and why it's essential to spot these to identify order block. First, we have the Chach green, which signals that price has changed its structure and shifted to an uptrend. After the Chach green appears, and as price starts to form an uptrend structure with higher lows and higher highs, a BOS, break of structure, will be formed once the price breaks above the previous high. This is a strong signal that the uptrend has truly begun. Then, when a Chach pink appears, it signals that the previous uptrend structure has been broken. Similarly, when BOS pink occurs, it signals that a downtrend structure is forming, with lower highs and lower lows. We need to look for Chach and BOS because when whales enter the market with large volumes, they create a strong momentum that makes it easier for the market to move. The involvement of whales can shift the market structure or cause the price to break through previous highs or lows. Next, after identifying imbalance, Chach, or BOS, the indicator will look for the nearest swing point to form an order block. We will be looking for 2 of the most common swing points: swing low, marked with pink dots, swing high, marked with green dots. Swing points are determined by the neighborhood. This means that if you set the neighborhood $3, the swing low must be lower than the prices of the 3 candles before it and lower than the prices of the 3 candles after it. Similarly, a swing high must be higher than the prices of the 3 candles before it and higher than the prices of the 3 candles after it. We use swing points to identify order blocks because an order block is the last candle before the price moves up or down. Therefore, using swing points to identify order blocks makes perfect sense and is logical. By combining all these conditions together, we can identify a reliable bullish order block. Once we identify the bullish imbalance, the next step is to confirm that the market is forming a Chach nearby. This signals that the market may be changing direction and entering an uptrend structure. Next, we identify the nearest swing low, which is the lowest point before the market shows signs of reversal. Pinpoint a strong bullish order block, where price is likely to return. A trade signal will be suggested when a bullish reversal candle appears inside the bullish order block, marking a change in price action and a high potential for reversal. Similarly, for the bearish order block, it is also determined through all three factors. After the indicator identifies a bearish imbalance, it then detects a nearby BOS, marking that the downtrend is continuing. Next, the indicator will search for the nearest swing high to form the bearish order block. A sell signal will be suggested when a red reversal candle appears inside the bearish order block, indicating that a reversal is likely to happen. This red reversal candle shows that selling pressure is increasing, providing an ideal signal for a sell order. A key feature of the indicator is the break signal. This isn't just a simple break of a zone, it is only suggested in order block zones that don't have a return signal. And as you can clearly see, they are all order blocks, but the break signal is only suggested in zones without a return signal. In contrast, in zones that already have a return signal, the indicator won't suggest a signal when price breaks through. This allows you to take advantage of weaker order blocks where you can't use a return signal, opening up trading opportunities with potentially instant profits. Next, we'll guide you on how to trade demo effectively with this indicator. The simplest approach is to enter a buy order when the signal appears, then place your stop just below the order block. Since these are reversal signals, you can set a larger target than your stop, aiming for a RR ratio of 1 to 1.5 or higher, ensuring steady profits with strong positions. Using a reasonable RR ratio helps you manage risk effectively and optimize profits over the long term. What's great about this indicator is that you can use it for highly effective range-bound trading. Specifically, by continuously identifying order block zones, you can enter a trade and set your target right at the opposite order block zone, with the stop placed just below the bullish order block for a buy order and above the bearish order block for a sell order. Since order blocks act as supply and demand zones where price tends to react strongly, setting your target at the opposite order block reduces risk when there are sharp reactions. It also allows you to effectively reverse positions between order blocks. This method is also especially useful for traders who want to trade efficiently in a sideways market. That's all for today, and I hope you found this guide helpful for your trading. If you have any questions, don't hesitate to reach out to the ninZa.co team. We're here to help. If you enjoyed the video, please hit like, subscribe to the channel, and click the bell icon to stay updated on our latest videos. Thanks so much, and I wish you all successful trades. I'm looking forward to seeing you in the next videos.